John Alzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Alzheimer.
Hello, my name is John Alzheimer. I am a consumer credit expert. I have been in the credit industry for almost 30 years now. I have spent time at FICO, which is one of the two generally recognized credit scoring brands in the United States, and obviously FICO is behind the FICO credit scoring system. And I've also spent time at Equifax, which is one of the three generally recognized credit reporting agencies. So this question I'm going to go through today is actually one that we got from a viewer. Can debt collectors collect commercial debt? So there's a lot of important nuances that we have to go through here to unpack this question. So debt collector is also commonly referred to, and probably more informally referred to, as a collection agency. And so these are the companies that if a service provider or some sort of a lender is unable to collect a debt from a particular debtor or a customer, they will outsource that particular process to a third-party company, and that third-party company is generally referred to as either a debt collector or a collection agency, okay? So now that we understand what a debt collector is, we also need to understand the difference between commercial debt and consumer debt. When you go to, Chase Manhattan Bank or JP Morgan Chase and apply for a credit card for your personal use, that is a consumer debt. When you take out a 30-year fixed rate mortgage and you go buy yourself a nice house somewhere in your name and maybe a co-applicant's name, that is a consumer debt. When you go out and borrow money to buy a car and you drive that car for personal use and the auto loan is in your name and maybe a co-applicant's name, that is a consumer debt. If you are a company and you extend credit for, say, the purchase of a commercial vehicle or equipment, and that equipment is being sold to a company for the purposes of, say, installing equipment on someone's roof for building or for renovating a home, and the loan is in the name of a company, that is commercial debt. Even though obviously it's an individual consumer that's making payments on the debt because you have someone in the company's lending or accounting department or accounts payable department is actually writing a check. The check is actually coming from a company to make payments because it is a commercial debt. Very different here. The difference between a consumer debt and a commercial debt normally is that the consumer is liable for consumer debt and the company is liable for commercial debt. That is usually true, but not always true. So before we go any further, let's get back to the original question. Can debt collectors collect commercial debts? Of course they can. They absolutely can, but they're only allowed to collect the debt from the liable party, meaning that they can't try to collect the debt from somebody that doesn't actually owe it, okay? That's against the rules. When you take out a commercial debt, so for those of you who are watching who are small business owners or were small business owners at some point in time, you may have taken out loans or credit cards to help support the funding of your business. And so while the credit card or the loan might have been in a business name, the lender, because you were such a new company or such a small company, may have asked you to personally guarantee the repayment of the debt. Some people kind of, in the world of credit reporting nomenclature, refer to that as a PG. So you have personally guaranteed the debt. When you personally guarantee a commercial debt, it becomes a consumer debt. Even though it's being delivered to the attention of a company, ultimately, if you were to look at the paperwork regarding that particular loan or extension of credit, you have signed as the owner of the company or as the principal of the company, and you are now personally liable for that debt. So, can debt collectors collect commercial debts? In both scenarios, absolutely. If it's truly a commercial debt with no personal guarantee, then the debt collector is allowed to come after the company directly to collect the debt, but they're not allowed to go after any particular individual consumer unless that person has signed a personal guarantee or has otherwise pledged their personal credit reputation towards the repayment of this commercial debt. Can commercial debts end up on consumer credit reports? Yes, they can absolutely end up on consumer credit reports if the consumer is personally liable. Because remember, ultimately, when you sign that personal guarantee, even though that commercial debt is being sent to a company every month, really it's the individual who signed the personal guarantee who's liable for repayment. Now, that doesn't necessarily mean that a debt collector is going to go after a consumer to collect a commercial debt. They may have a policy that they only want to go after the company to collect the debt from the company since it was a commercial debt. However, from a credit reporting perspective, and this is important because generally the reason this question comes up is because someone who owns a small business wants to know if they default on commercial debts, if it's going to blow back to them personally. And the answer is yes, but only if you have somehow pledged a personal guarantee, which is normally in writing. I have seen a personal guarantee overtly in writing, and I've seen some suggestions that there was a personal guarantee, but it was otherwise on documentation record of the relationship. Are commercial debts that are reported to the consumer credit reporting agencies harmful to consumers' credit scores? Well, a collection on a consumer's credit report is considered a negative event. And even if it's for a commercial debt, it's still considered a negative event. So does it have the potential to lower a consumer's credit score? Absolutely it does. Is it a guarantee that it's going to lower a consumer's credit score? Absolutely not. That question is more accurately answered with, well, it depends, and it's going to depend on a lot of things that we're not going to discuss today. But I think the important thing to walk away with here is that even though you have a credit card in some company's name or a loan in some company's name, go back to the paperwork you signed when you originally took out that extension of credit. You may not even have read it. You may have just kind of signed and worked and moved on, which is pretty common. You'll click a box and move on without actually seeing what you've agreed to. And it's very, very likely that there is going to be some language in that agreement that is a personal guarantee, which then converts this debt to a consumer debt. So that's an important distinguishing aspect of that kind of debt. So if you have any questions about commercial debts versus consumer debts as it pertains to collections, drop them in the comments section below and I'll do my best to answer them. Thank you for watching. Have a great rest of your day.
For more videos and credit tips from John Olsheimer, go to www.tradelinesupply.com.